Who has in their system mobile payment? I want to see the hands. Very few. Who's paying less than 10%? Nobody. 10 to 25% commission? Well, if 4 people raise hands, that's 1/4 of the people. Between 25 and 50? Half. And more than 50? Nobody. Okay, so it really varies from country to country and operator to operator. So we would see probably somewhere between 10% to 20% in very, very developed markets with operators knowing the business well. And if the operators have a big negotiation power, then they will charge more. Then we have carrier billing, which is fixed line, fixed operator billing. Does anybody have fixed operating billing in their country or in their system? That is like AT&T charging to your fixed line. There's one. There are a few that can be used. And we have PayPal and the likes. But as long as we make it more convenient and the options more, of course, the monetization goes up. Then we have the problem of increasing the conversion rates, for example. One way of increasing the conversion rates is to make a one-click checkout, which means you get the credit card information in the first transaction of your customer, then store it somehow through your systems or through an aggregator. Then the next time he's buying something from you, you provide that option. It's like, just click on this and I will charge it to this credit card. So that's a very convenient way of shopping in the e-commerce space, and that can easily be integrated in our sites too. So I would like to ask you, who is doing one-click shopping, storing credit card numbers? Nobody. If nobody is doing that, I would really suggest you start doing it. There are 2 ways of doing that. One is building up your own system, but it requires a lot of IT governance from your banking regulations. You got to be PCI DSS level 1 certified, and every 3 months you get an audit. Or you can have a lot of payment aggregators that are doing that for you. You just pass on, call their API, they would store the credit cards numbers themselves and bring you back a token, a unique token, so that each time you charge for that specific credit card, you can use that token. And new methods of payment are coming on the way. Actually, not a method, but also a currency. Virtual currencies are on the way. Has anybody have heard or haven't heard of Bitcoin? Okay, does anybody use Bitcoin as a payment method in their site? There's one, back page. We don't use it. We don't know much about it, but we know what it is. But we have a short video. Let's look at it.
What is Bitcoin? Bitcoin is the first decentralized digital currency. Bitcoins are digital coins you can send through the internet. Compared to other alternatives, Bitcoins have a number of advantages. Bitcoins are transferred directly from person to person via the net, without going through a bank or clearinghouse. This means that the fees are much lower. You can use them in every country. Your account cannot be frozen, and there are no prerequisites or arbitrary limits. Let's look at how it works. Several currency exchanges exist where you can buy and sell Bitcoins for dollars, euros, and more. Your Bitcoins are kept in your digital wallet on your computer or mobile device. Sending Bitcoins is as simple as sending an email, and you can purchase anything with Bitcoin. The Bitcoin network is secured by individuals called miners. Miners are rewarded newly generated Bitcoins for verifying transactions. After transactions are verified, they are recorded in a transparent public ledger. Bitcoin opens up a whole new platform for innovation. The software is completely open source and anyone can review the code. Bitcoin is changing finance the same way the web changed publishing. When everyone has access to a global market, great ideas flourish. Bitcoins are a great way for businesses to minimize transaction fees. It doesn't cost anything to start accepting them, and it's easy to set up. There are no chargebacks, and you'll get additional business from the Bitcoin economy. For more information about Bitcoin, visit weusecoins.com.
So yeah, it's such a new concept. The governments are having a hard time to understand it. And if you look at how the global monetary system started and evolved, this is really opening up a new era, I guess, because there's no central bank in the system. There's just an algorithm that's running it, and the valuation of it is quite discussed within many circles. But well, this is a new thing, and it's coming. It's already there, and it's happening. New ones are also coming. So, well, there is also the issue of fraud and identity theft and returns on cashbacks when you talk about cashless transactions. But these are the topics that we will be covering with our distinguished speakers. So without further ado, let me introduce our panelists for this session. We have Casimir Ehnroth. I hope I pronounced it right. So he is the country manager of Klarna, and he has been with Klarna since 2011. Klarna was founded in 2005 and helps sellers and buyers with Klarna checkout, invoice, and account products. They are operating in 15 countries, working with 43,000 merchants, and serving 25 million customers. They processed, this is impressive, 4.6 billion euro transactions in 2013. Sorry. So welcome, Casimir. Then we have Greg Kidd from US. He has invested in many exchange spaces. Actually, Greg has been with us in 2 previous conferences, I guess, including competitors of Craigslist, and also messaging companies, that is Twitter, and payment companies, Square, and many Bitcoin-like companies. He's now the chief risk officer of Ripple. It's a distributed payments protocol like Bitcoin, and it's backed by Google Ventures and Andreessen. So, Greg, welcome. And we have David Pope, who is the European marketing director of Jumayo. And Jumayo is using advanced computer vision technology, and it's a next generation credentials management company offering payments and ID scanning and validation products for mobile and web transactions. It's designed to reduce fraud and increase revenue by minimizing friction in customer transactions. And their products integrate easily into mobile apps or websites and create great customer experiences. So welcome, David. As our last panelist, we have John Nagel from Ireland. John has started many companies, and the last one is in Myanmar, but prior to that, he started a cash acceptance company, Payzone, to go after underbanked or unbanked community that doesn't have cashless transactions capabilities, Payzone, and then took the company to IPO in London Stock Exchange. And now he has started a similar kind of, I believe, business in Myanmar, the same type of business, very interesting market. And we welcome John to join us. Okay. I will be joining you. I might have to turn this a bit towards you guys. Okay. You don't have to. Okay. So, one low-hanging fruit to monetize more is to increase the conversion rate, to make it happen to buy. And how does Klarna work on making it easier and increasing conversion rate in checkout?
We work by, we launched a new product in the Nordics and Germany lately, which is called the Klarna Checkout, which is our flagship product that we're going to go worldwide with slowly. It is an integrated checkout, as the name already says, where you have all the payment methods integrated into one service. What's revolutionary about that is, since Klarna originates from post-payment services like invoice and account services, so having that information already in our database, we can use that information we have of consumers and offering them an invoice. And offering an invoice, you can use only top-of-the-mind information. So basically what you do is, when you have the checkout, you can just feed in your top-of-the-mind information and do a purchase. And eventually you get a one-click buy button, as well as has been pointed out previously here, is that the more you'd have friction in the checkout, you are redirecting a consumer to a third-party site like 3D secure, direct banking services and so forth, you lose X percentage of your consumers, no matter what what you're buying. Is it a classified top-up or whatever? Mm-hmm. So by having as frictionless checkout as possible for the consumer, asking as little information as possible, through that we are able to high-end the conversion. And besides, it's mobile optimized, so we get the same conversion rates for mobile as we get on desktop.
Okay. So do you have any idea about how the one-click checkout increases the conversion rates? Can you give an example from some of your customers maybe?
I can give you an example there. I mean, many of you maybe know a company called Adlibris. It's owned by Bonnier. It's a Swedish e-store. They sell books and digital books and so forth. They tried out checkout. They had a very optimized checkout previously. They had a very good conversion rate. I mean, checkout conversion rate was about, I think it was 40-something%. By implementing our new service, they had on desktop, they had 59% conversion rate on checkout.
So it's like a 50% increase on the...
Yes, but what was revolutionary there was that their mobile checkout went from 10% to 58%.
Yeah. I've spoken to some e-commerce companies, especially globally and mostly from the European region. I've heard increase in conversion up to 100% by implementing one-click checkout, by storing credit cards or by other means. So, thank you. So we hear this payment friction. It's become a buzzword in the industry, and that really affects the conversions. And David, how can marketplace sites encourage cashless transactions and remove payment friction?
Okay, sure. So in terms of the abandonment statistics, I completely agree with the size of the shift, the increase in conversion you talk about by optimizing. But the statistics that we see at the moment is that roughly 66% of mobile device users, whether that be tablet or smartphone, they're regularly abandoning transactions. So that's a huge amount. You kind of transfer that scenario to a bricks and mortar store, people dumping their baskets and walking out and heads would roll. But I think this is... online retail is both a blessing and a curse, and not all abandonment is actually within the merchant's control. So first of all, you have to accept that, particularly over mobile. Your customer might get a text, get distracted. They might have to get their report done for their boss. God forbid, they might even accept a phone call on their device. So it's not all within a merchant's control. But the research we did, it showed that 47% of abandonment is due to payment friction. And so there's lots of things you can do there. I'm no UI user interface expert myself, but even now, when I transact online, there's little things that I see that really, really annoy me. So if I'm asked for a phone number and the merchant is saying to me, can you please put the code, the dialing code in this box and the rest of your phone number in this box, why should I do that? Merchant should be clever enough to pass that data out and only ask the customer to fill in one field. Because sometimes I might fill all my phone number in the STD, in the dialing code field, and then there's an error, and then I give up and abandon. And other small things as well. It's like when I know that the next field I have to enter data into is going to be a numeric field, why on earth does my keyboard not automatically revert to the numeric keyboard instead of the letter keyboard? So there's so many little things that merchants can do, but many merchants don't yet do. But at Jumio, one of the things that we see is that the checkout form is, well, look at it this way. So e-commerce is 20 years old this year. In the last 20 years, the whole world has changed. What we buy has changed. How we buy it has changed. But one thing has stayed the same, which is the checkout form. So we believe these days everyone's devices, their portable devices, should be clever enough to do the hard work for them of filling in the data. So we use computer vision, which is a technology that allows your customers to come to your site or your app. They don't have to fill out 11 different fields with 100 different characters. All they have to do, whip out their payment card, hold it up to the camera on their mobile device, or whip out their driving license, hold it up to the webcam, and computer vision will see and scan and validate the data and carry it into the checkout process. So originally we did this as a fraud prevention tool to make sure that the customer really has that card. But what we see is that scanning is so much quicker than typing. And the quicker it is, the less people abandon. The less people abandon, the more people complete. And as a result, we see around about 25% increase in conversion, or to put it another way, a 25% decrease in abandonment.
Yeah. That's really nice, because some of the people don't feel confident about having somebody else storing the credit card. But I saw you demonstrated me your solution. And you can just put the credit card there, and the form is filled automatically. And of course, there's another option of saving too. So people say that there is not enough playing with the checkout page. I think they're right. I mean, you can always over-optimize.
Yeah, I think it's prime for disruption. It's been the same way for the last 20 years.
So, Greg, you have been focusing lately at the interface of classifieds and virtual currencies. And what are the benefits, risks of allowing virtual currency payments in our sites? I mean, how do they help monetize us more?
Well, first, does anyone here in their classified sites allow their users to carry a balance on their site? Okay, so, all right. So the interesting thing to us is right now you're always going to an outside vendor, either a bank or a telecom. We've seen examples of both. But with virtual currency, there is the potential that your users could carry balances actually in your site. And so it would mean that they would have a balance. It could be in Bitcoin, it could be in fiat currency. But essentially, your exchanges could become money systems in and of themselves, so that basically buyers and sellers can basically transact without having to go through a bank or a telecom. And so we're beginning to see the first instances of that. And really the advantages are the transactions are, there's no interchange. So we saw the 10 to 20% for mobile. We know the 3% for credit cards. With Bitcoin and the other virtual currencies, there is no interchange, so they are essentially free. They're instant, they're global, and they're what we call neutral. So we'll talk a little bit more about that, but the real advantage is instead of trying to tackle all these friction forms with banks and telecoms and whatnot, there is an alternative, which is to basically allow this universal currency to be stored as value for your users within your exchanges, and to allow them to transact with those currencies directly, either with you to buy additional ads or services, or potentially to do purchases between seekers and providers on your service.
Yeah. So, and you have been working in Ripple now, on Ripple. What is Ripple? I mean, how it is different than Bitcoin?
So the difference with Ripple, Ripple's created by a bunch of Bitcoiners. We think of Bitcoin as the 1.0 virtual currency. With Bitcoin, there's a global ledger. It's not centralized, nobody controls it, but there's one ledger of how much Bitcoin everybody has in the world. The difference with Ripple is you can hold on that ledger not just Bitcoin, but any fiat currency. So you can hold euros, yen, whatever the local currency is. You can hold any store of value as well. It could be gold, it could be bonus points. And with Ripple, if you're moving from one form of value to another, like the seller wants to be paid in euros and the buyer has Bitcoin, that conversion is done in stream, still in real time, no fee. So Ripple just basically lets you hold a ledger. Just like if you have a ledger currently for like, I think Backpage, people have prepaid some of their value into Backpage so they don't have to pay with a credit card for each new posting they do. This would allow you to keep those balances on a ledger, both for the buyer and the seller, so that you could move money. And even if buyer and seller don't agree on the form of payment taken and the form of payment made, there's a third party, a market maker, built into the protocol that still allows that transaction to happen frictionless in real time.
Interesting.
That's Ripple.
Yeah, that's a really new area, and it also brings in some grayness in the regulation space too, I guess. For example, if I have to speak from my country, to hold a balance account for a, say, not a professional user, then it may come into the area of banking regulation, and the lawyers say you can do this with your professional customers, but not with the others. And so it's really a new era that is opening, I guess, with the virtual currencies. And when I opened up the session, I was telling that we are always running after changing business model, new products, product bundles. But maybe one way of changing a product is maybe changing the way it works with an easy way of payment. And today, a big challenge for newspapers is that they're having a hard time monetizing their content on the web. And maybe there's a solution for that. Casimir, what is your thought on this?
Let's see first, how many has a paywall on their webpage? No one? No?
So we need quite more information in many
okay.
aspects.
The thesis behind this is that, for example, here in Scandinavia, a lot of newspapers or whatever media houses has a paywall. So you can read 3 or 4 articles for free, and then you're hit by a paywall, and then you need to start registering and entering your credit card numbers or similar
one
process.
Newspaper recently started doing that in Turkey.
Yeah.
So you click on and you have a wall. Yeah, it stops you.
Exactly.
You have to pay.
And that is quite a lot of friction again, and it's actually quite expensive for the consumer to do it. And our vision is that it would be a lot better to have sort of, you show the teaser of the article, the header of the article, and you can start reading parts of the article, and instead, just as you do a top-off of X 10 euro cents or X 10 dollar cents, you have an easy way of just a one-click purchase, and it's added to an account that you have, for example, with us or whatever currency you're using, and then you get the whole digital content, and it's open directly for you. That way you can sell a lot more articles. You can monetize on a single article.
Yeah.
And especially when you have hot topics, hot news, I mean, you can use it endlessly.
Yeah. So what you're basically saying is, don't make it a sales process, rather integrate in a way that it's very easily bought right next to the content.
Exactly.
Yeah.
Or actually it should be within the content.
Yeah,
just
within the content.
Continue reading the article, click here and you click there and you get it.
Yeah. Yeah.
So that's
interesting.
Should be a very good way for all media houses to earn more money.
Yeah. Thank you. So although our topic in this chat is cashless transactions, we have a man of cash here. So you have served an unbanked community in your previous business, and now trying to do it in a very interesting market in Myanmar. Can you elaborate more on this?
Yeah. First of all, I suppose I am on the opposite sort of spectrum of this here. We address the old-fashioned cash community known as the unbanked in the world. There's 5 billion unbanked people in the world. If you go to the most developed markets like Germany and the UK still has 12% unbanked. Germany has still 11% unbanked. Poland 45, Turkey 55 unbanked. And what our company does is we address how those people can participate in the digital world. So we set up networks to allow them to walk into a local convenience store, hand over cash and get a digital token that can then allow people to go onto your sites and buy ads. So that's our core business, and that's our addressable market. And the challenge really, and how many in your domestic, when you're not traveling in your homes, how many actually of you have a prepay mobile phone instead of a postpay?
Almost none. None. Yeah. Well, everybody has postpaid phones.
Yeah, and the reason I ask that is that really to understand the cash community, you have to put yourself right into the shoes of that consumer and understand, I don't have a bank account. I cannot buy things online. I don't have a debit card. I can't do this. I can't do that. So the cash community is a huge market, and the bottom line is that online is extremely, extremely difficult for them to access. So if you look at your existing markets in any of you from around the world here, can you imagine getting access to the cash community in your market, even if it's only a 12% access to it in a market where there's 88% banked? That extra 12% is going to ride up your gross revenues and bring it right down into markets that are underdeveloped in the payments world, and you are significantly increasing your chances to drive transactions, to drive incidents, and to drive new volume into the market. So we're on the cash side of the cashless community, and now there are very, very, there are fantastic facilities available, especially from companies like Alvin's company, where if you can get into the direct telecoms channel, you know, they access the unbanked world and they help that a lot. You know, a lot of people don't do that. It's very country-centric, as he said himself, and it's quite expensive. But it is a fantastic way for the unbanked to get at it. So what we're doing in Southeast Asia now is we're basically going down there. We went down to Myanmar and we set up we're building a network, a payments network down there. It's 98% of the community is unbanked. So it's going to take a long, long time for that to be a payments community. So we're enabling and building systems down there now to allow people to pay for cash. And the context of this morning for us here is we're launching a new product called My Ad Voucher, which allows you to buy basically an ad online. If you're on the bus, you want to sell.
How does it work? How does this work?
How it works is, let's just take a mobile user wants to sell his bike, goes on to one of the classified ads, posts his ad, gets right through to the payments page, and when he hits that Visa MasterCard wall, you know, he says, oops, I can't place the ad. So there'll be like a PayPal, there'll be a My Ad Voucher button. You push the My Ad Voucher button. It immediately goes to our platform, authorises the publisher's value, and we basically then send him a barcode, and he goes down to the nearest convenience store, 7-Eleven, Spar Shop, hands over the barcode, pays cash over the counter, and then we go back to the publisher and say, that's no longer pending now, that ad is paid for, post the ad. So
okay.
Fairly simple process around subscriptions and ads. Now the difficulty is, you know, getting access to the cash acceptance networks around the world, and I have a long history in that. There are 400 cash acceptance networks around the world, and we're interfacing with all of them one by one at the moment.
Okay, yeah. This when I spoke to you previously before the session, it's really hitting to me. It really hit to me because well, we are trying to increase our revenues by addressing an addressable market, but this really changed the size of addressable market. Actually, mobile payment was a change in the addressable market from the credit card holders to non-credit card holders, but people with enough money to afford payments through mobile payment. But there are still some people out there which, A, do not prefer to pay with their phones, or they cannot afford even with their phones, and they don't have the credit card. This opens up a new, actually, market for all of us to be addressed as classified players. Thank you, John. Okay, we've been speaking about the increasing monetization, but there are also issues in cashless transactions too. So from the top of the mind of the consumer, there's always this trust and confidence issue when it comes to a payment and credit cards and so forth. And there's also fraud too. So, David, how might fraudsters use marketplace classified sites to commit identity theft?
Okay, so I'm a bit of a fraud geek. I do a lot of research into fraud. Sometimes I go into prison to interview convicted fraudsters on how they do fraud, the how, the when, the what, the where, the how and the why, and all that sort of thing. And fraudsters do like classified sites. Fraudsters do like online communities. When we read about fraud, we think it's this one large process, but there's actually 4 stages to the act of fraud. Firstly, stealing the identity that they're then going to use in stage 2, which is the act of fraud. Thirdly,
which happened to eBay yesterday.
Yes, this is true. Yeah.
Does everybody know about the eBay ice yesterday?
Do you know about?
You.
Yeah, maybe you.
230 million identities were stolen yesterday, including the usernames, passwords, phone numbers, addresses, the complete identities. And I already got hacked last night because I reused one of those passwords at eBay. I think that's the biggest hack in history.
Yeah.
Yeah, I think this target was only 50 million by comparison, wasn't it?
Peanuts.
Yeah. Yeah.
Sorry for interrupting.
Yeah, so fraudsters do love classifieds. Of course, there's one way to protect yourself from the large-scale hack, and that's more on the security end of your business. But what also fraudsters will do is come into marketplaces and do one-on-one identity theft of the people that they meet on the marketplaces. Sometimes that's basic social engineering. a fraudster will get talking to someone and say, oh, I bet you're a Pisces, aren't you? And the other person goes, oh, no, I'm a Libra. And then they find out the year of their birth, and then say, oh, my sister's Libra, she's the 21st, what day are you? And so it's a very easy way for fraudsters to speak to people to start to elicit name and address and date of birth information as well. The other way, of course, is that fraudsters will put on a classified ad an offer that somebody just can't refuse. So it might be a PlayStation 4 for $200. The fraudster is then flooded with offers saying, yes, I'll buy that, please. Then the fraudster says, oh, I'm sorry, we just ran out. So he doesn't steal the money from the credit card there and then, but what he does is he keeps the credit card information and sits on it, and he might sit on it for a month, 6 months, and then use that credit card information at a later date, so that the person who's had their credit card data misused doesn't really have any idea where the breach, where the theft came from. Or, of course, it then could go on to the carding forums online and sell the data, and it's sold right around the world. It's all bought in batches, so you buy 100 at a time, and it's $10 per American Express or Visa or whatever. So there's ways that classified communities and online marketplaces can protect themselves, firstly at the security end to prevent the large-scale breaches, but then also by undertaking identity verification processes on the people as they apply for the accounts on their site. So Threat Metrics next door, they've got a fantastic fraud prevention system. And the way that Jumio does it is to do authentication of the customer when they come in by showing their identity document. So you show your passport, your driving license to the webcam. And what Jumio then do in the background is to check all the security features, check it's not a forgery, check it's in the correct format if your English male passport was issued in 2010, etc. So we do lots of security checks in the background. And this is increasingly used by some of the large social media sites who use Jumio at point of account security reset to make sure it's not a fraudster coming in to try and take over someone's account. And it's also used by Airbnb to generate trust within a community. So on Airbnb, you go in there, you want to rent your property, you want to hire a property. Airbnb say, oh yeah, can you just hold your passport up to the webcam, and off they go, and Jumio do the authentication of the identity document.
Yeah. I mean, using high tech, of course, for avoiding fraud is really the next big thing. We have a lot of fraud management systems, like calculating the risks. But also we could use vision and image processing, as you said, to reduce the risks.
Can I add something?
Yeah, sure.
It was also what since we carry the fraud risk on our purchases in our platforms, we are hit pretty much by fraud every now and then. And you can what you see is quite interesting is that they have discussion forums for themselves where they said, okay, this merchant here and there is now quite eligible for fraud, so hit him. And then everybody hits that certain merchant, certain time, and so forth. So it's something that you really need to consider, and it's something we fight every day.
It's quite scary that the fraudsters know in real time when a particular site has relaxed their processes, because one particular site might have a big push on acquisition and relax the customer verification process, but the fraudsters know in real time, and they'll talk about the banks in the same way. They'll say, oh, red is weak now, but blue is strong, referring to what colour the logo is of the relevant bank. So it's quite scary how real-time their knowledge is.
Yep.
Yeah. Another issue is, especially in e-commerce, but also it happens in classifieds, is managing, handling returns and cashbacks well. Because it's when it comes to money, it's all about trust and confidence. And somebody gives you your credit card, you charge some amount, but somehow the transaction is cancelled later, then they want their money back. And if you don't have a process, a very seamless process for them to have their money back, or if it takes a long time, maybe say weeks, or maybe even nowadays, the expectations are so high that if it takes a couple of days, people start complaining, people start writing in forums that you're using their money and so forth. So, yeah, there should be a better way of managing returns and cashbacks, and when it comes to returns, it's always includes some manual labor. I mean, you go to your accounting department, they check out the numbers. Sometimes you cannot charge back the credit card if some certain time has passed, and then you have to get the bank account, then transfer wire money. It can be really a hassle for us too. So are there ways to decrease our back office costs and labor costs, customer, to to handle this administrative work?
This is something we had as one of the main building bricks when we launched the latest service. Is that, I mean, it is, as you mentioned, it's for example, if you could take Finland as an example, since we are here in Helsinki today. We have 9 different banks in Finland. Then you have, of course, 4 credit cards. And then you have a post-pay service provider maybe on your classified page. That means that you have 14 different return channels, 14 different payment delays, and 14 different costs, and 14 different headaches, basically. What we did was that we took over the service from the merchant or the one having the service. So now they only have one channel. So what they do is they automatically send an API call to us, and this is now cancelled or returned, and we return the funds to the consumer depending on how the payment has been done, since we also carry the risk.
Any channel?
Any channel.
Okay, interesting.
Which means that you save quite a few work hours.
We have to work on technology or work with vendors to make this easier process for our consumers, because once they are stuck in a return or cashback process, they will not buy from that site again, or they will have hesitation of buying, because that really affects the trust. So now coming back to virtual currencies, how is returns or cashbacks, how are they handled in virtual currencies?
Well, so first,
are there any returns process?
Well, it's completely different. So in traditional payment systems, you're pulling the money. So the buyer gives over their details, the company or organization pulls money from a credit card, they pull money through the bank account. It's completely opposite from how Bitcoin and these other virtual currencies work, because no information is needed to pull a payment. It is a push payment. The payor, as long as they know the address of who they are paying, simply push the money into that account. That has consequences for chargeback as well. There's some complaints and concerns by regulators, because in that scenario there is no chargeback. So it is a vastly simpler model because it's push rather than pull, and there are no chargebacks. You could still have a separate legal process where you could go, but within the system itself, no fraud because it's push and no chargebacks. So radically simpler.
Interesting. And cashback in your system?
Yeah, cash is very simple. Some consumer hands the cash over the counter, gets a digital token, spends it on the site. We settle, my ad voucher settles with the publishers in 7 days. It's the same cash cycle as where we collect from the retailers. So every 7 days. If there's a credit note required, 2 options. Publisher can give the credit onto their site and leave them with a credit balance, or they can send them a cash out token, and they can come to the same shop or any shop that's within the cash acceptance network and cash their token back.
Quite easy.
Yeah.
Okay.
It's regulated, mind you, but it's quite easy.
So, David, how can marketplace sites increase trust and ensure confident transactions in their community?
Okay, so to go back to the example of our caffeinated US marketing guru who gave the presentation earlier, he said that sometimes the marketeer's job is to grow the market, not necessarily to grow your percentage of the market. So I think that if you grow the trust in your marketplace, your classified directory, then the overall market grows. If you go back to what Elon Musk proposed when he first set up, so he's like the master of classifieds, right? When he first set up eBay, and his belief was that people are inherently good, and that still holds true. Classifieds directories are not littered, not riddled with fraudsters, but the more you communicate to your customers that yes, this marketplace is trusted, the people are trusted, then that's going to increase the trust in the whole network. So obviously, how long they've been a member, how many transactions they've done, but what we're starting to see now is that certain sites are saying, yes, this member is validated, this member has had their identity verified, and that's particularly true on dating networks as well. So again, there's lots of little small things that sites can do. And the way that Jumio work is that we work with clients such as FOP. So FOP is an app just next door from Sweden. They are actually. And so that's an app where individuals can sell the photos they just take with their iPhones. And big brands can go on there to say, right, we want people to go out and get us photos of ships in a harbour. But for those brands to have confidence that those photos are legitimate from the people and from these people and haven't been copied off the internet, they want to be sure that their customers are who they say they are. So FOP, during the account registration process, just use Jumio. They get the name and address data nicely flowed in by scanning the identity document, and then there's a verification of the identity document that happens in the background. Same with Airbnb, same with some of the big social media sites, and same with, so there's a site in London called, in the UK, called hassle.com. If you want to find a cleaner, you want to make sure that the cleaner is who they say they are and they're not somebody that's going to come and rob your house. So we find the way to put trust into networks is to verify the identities of the people that are joining the networks, and in turn it increases the whole size of the market.
Yeah. Validation and verification really matters, and it helps in terms of your brand perception, being a more trustable brand, and it really is a rising star all around the world. That's what I've seen. I've seen a lot of pure verification companies coming out as a just pure verification service to all the websites in some certain countries too. Interesting. So, although the virtual currency, specifically Bitcoin, has been a latest buzz in payments and currencies, we don't see much adoption in classifieds. And what are the latest classifieds and virtual currency integrations you're seeing?
Well, I guess the most famous one has been Overstock, was one of the first to start taking Bitcoin, and I believe Backpage in the United States is also taking Bitcoin now. Those would be two examples of early adopters.
Yeah. What do you think is holding back the adoption of the virtual currencies?
Well, it's still a gray area because since virtual currencies are global, the jurisdictions, i.e. the governments in each country, don't really know how to classify them. So in some countries, they've been classified as a currency, in others as a security. In the US, the IRS has just called them a commodity. And so the uncertainty about the regulation creates fear, uncertainty, dread around that. There have been some high-profile arrests. There was Silk Road, which was set up on the back of Bitcoin, and an enterprising young computer science graduate from the University of Texas processed about $1.1 billion worth of transactions, mostly for drugs, but also for arms transfers, et cetera, whatnot, and earned about $70 million in commissions. And
through Bitcoin?
Through Bitcoin. Just all they put the cuffs on him down at the local library. And so that is one example of someone who really pushed forward with Bitcoin and created Silk Road. And so those types of bad publicity knocks have probably scared some of the traditional operators, but there's no doubt that these exchanges work, but it's been so much on the cutting edge that some folks that are more conservative have taken a wait-and-see attitude. But again, others are...
We do wait and see.
Okay.
Thank you all. We have another 10 minutes if you have questions to our panelists, speakers.